As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're delighted to have this returning guest tonight. Lynette Zang is the Chief Market Strategist for ITM Trading. She's been with us a couple of times here before on Reluctant Preppers to give us her insight into market activity and how we can protect ourselves from the eventualities that may come. And we wanted to have her back at this time following the dramatic plunge in the Dow Jones Industrial Average that we've seen over the past week, especially since it has to do with the stability of the financial system as a whole. So, Lynette, thank you once again for joining us in Reluctant Preppers.
It is always a pleasure, Dunagun. I enjoy coming in on your show so much. So thank you for having me.
If we could just first directly focus on the elephant in the room of the Dow Jones Industrial Average plunge that we've seen over the past week. We saw like more than 600-point dive on Friday, over 1,100 points on Monday, and dead cat, whatever you want to call it. You can't even call it a bounce today. So when we had you on about a month ago, you talked about a stress test. I'm not using the right words, but you talked about a measure of the major investment banks' vulnerability to a upset that could cause systemic risk in the banking system. And that's certainly bearing on my mind as we're facing this upset in the market. And if you could kind of tell us, first of all, what you're seeing happening in the market, and secondly, what implications you think that may have on how this may play out and the ripple effects that this may have on our banking system, if any.
You know, I'm really, really glad that you brought that up, because what you're referring to does go back to the stress tests that the banking sector, the Federal Reserve runs in this country, and elsewhere they do it as well. And what you're referring to is called the leverage ratio. So that's the debt to the equity. And the one that fared the worst was Morgan Stanley in this country at 3.57%. And then in the rest of the world, or Germany, would be Deutsche Bank at 3.58%. And what that actually means is that they have borrowed so much money. Basically, they've borrowed about 90, out of 100. If we looked at it out of 100, they've borrowed about 96.5%. So if their equity, so it does matter a lot, because if their equity, if their assets fall 3.8 and 3.9% respectively, that means that Morgan Stanley and Deutsche Bank would both be insolvent. And their equity obviously is made up of whatever holdings they have in the stock market, the bond market, the real estate market, the and any other equity that they have. So a plunge. It's interesting that you talked about the dead cat bounce, because I always watch CNBC when I'm getting ready this morning, and I came into the office a little late because I kept having to capture screenshots. And right? And so
I have to admit, in our household, we were taking some screenshots yesterday of the screen as well. Go ahead.
Oh, absolutely. Absolutely. And this morning, pre-open, the Dow was down, I think it was 765 points. So that is one heck of a dead cat bounce. And I think that part of it is indicative of the central banks losing value. And you could also Google this pretty easy, because, FRED stands for the Federal Reserve Education Department. So this is from the Federal Reserve. And what this top chart represents, I haven't visited this particular chart in a little while. What this is interbank lending. So that are the banks loaning to each other. you can see now the first time that they did it was as we were transitioning into the pure fiat system, the debt-based system. So this starts in 1973. That's the first time that they started to utilize this data. And you can see how much it grew until we hit the crisis of 2008. And then you can see how it's plunged. But look at this right here. In January, the most current data that they captured on this was January 3rd. And this is a huge plunge to the absolute lowest levels, lower than it was when they very first started this program in 1973. What do you think the banks knew on January 3rd? I'll be very curious to see what it looks like when they publish the, more data since then. But the banks knew something, because look at how much it looks like what happened in 2008 when the banks got afraid of loaning each other money because they were insolvent.
Yeah, and when you say that it's plunged to the lowest level since 1973, is that inflation adjusted, or is that
below? This has nothing to do with inflation. This is the level of banks loaning to each other.
Okay.
When they have confidence that they're going to get the money back, they loan, right? But once the crisis hit, well, they knew that they were insolvent because they never settled or solved any of the issues that created that crisis. They just papered over it. So they had already dramatically dropped this. But I don't mean since 1973. I'm going to turn around and read the numbers. In 1973, this really, I'm not exactly sure what exactly this number means, but I'm going to tell you the numbers. So 1973, the lending rate was at 29.675. As of 1/3 of 2018, it was at 13.237.
so less than half of what it was
when they were very first starting this program, and it plunged just like what the stock market just recently did.
Interesting.
Look at how steep that is. Oh, really, really interesting. Because what it tells you is the banks know they're insolvent. They won't loan out any money because they don't think they're going to get it back. And they did that in January. January 3rd was the most current. That's when that plunge took place. It was like, bam, it wasn't a gradual. We could see here, this was a pretty steep plunge, and then it sort of meandered downward and drifted downward. This is a plunge that just happened the beginning of this year, not an accident.
The statement, follow the money or don't watch what they're saying, watch what they're doing, applies always in insider executive trading in large companies. You watch and you see if the insiders, the officers of a company are all selling the stock or all accumulating the stock. It can give you a very good indication of what people who have a lot more information than you do know about what is going to be upcoming. And then the best thing to do, as you've said, is you call it following the smartest person in the room or following the person who has more information than you do. In this case, we're seeing what looks like a historic multi-decade precipitous drop in the confidence of the banks to lend to each other.
Exactly. And that drop started in the crisis in 2008. That's when it started.
And you're saying we saw another drop off here in January of this year.
Huge. Exactly. Precipitous. It's like food.
And a month before, we saw the big drop in the Dow.
Mm-hmm. Coincidence? I don't think so.
What else can you tell us about the internals or the macro environment surrounding this drop in the Dow? You certainly pointed out that we've been in this historically high valuation bubble on the stock market for some time that has seemed unstoppable. It seemed it was almost dictated by policy. Melt up. That's a good saying. So what changed in the last week? Is there anything that you can point to other than that that finally it reached a tipping point and some players started moving and so the rest of them started moving as well?
Well, really, what they've been talking about, I mean, they've made some excuses. Oh, well, they came out with data and the wages grew the fastest that since 2009. And so that's about inflation, which of course the central bankers have been telling us forever is what we needed to get this kickstart this economy. I don't really see any one particular event, right, that would have caused this precipitous drop. But the interesting thing is you always have to say, I mean, wealth never disappears. It just shifts location. So in this current route, they said that about 4 trillion in market cap had been lost. So I said to myself, well, okay, where did it go? So I took a look at, and I'll send you these so you can see them more closely. So this one is the Dow, and you can see, this plunge, anybody that's been watching, right? But normally you would expect it to go into treasuries, which are considered safe
havens, yeah.
Right? Cash, which is this one, and gold and silver. Those are the safe haven trades. And of course, don't forget Bitcoin, that has been touted as being the new gold and the safe haven trade. Well, I'm telling you, I'm looking at all these different charts, and yes, you had a small bounce, little teeny bounce in the treasury bonds. You had, a minute bounce in the dollar index, which would indicate the cash index. You had, really no bounce in spot gold and a plunge in spot silver.
Right.
And oh my goodness, look at Bitcoin. Okay, that's worse than the other ones. That's worse than all of them, except for the Dow. So, one of the questions that I'm asking, and I don't know the answer to this yet. Is so where did that 4 trillion in market value go? Because usually it just shifts from one side of the ledger to the other.
Right.
I can't find it. I can't find it in any of these graphs. They're all done to the same date and the same period of time, and it should be pretty obvious to see that money didn't just evaporate. Where did it go? I wish I could tell you. I'm going to keep looking, and I'm sure I'll figure it out at some point. But the banks aren't lending to each other, and it didn't go from the risky stock market to any of the other risks. And really, let's pay attention to Bitcoin, which is supposed to be out of the system, but is not. I mean, that was, now this is as of yesterday. I frankly don't really know what happened to it today, but it went from, in some cases, more than 20,000 or 19,000 just in mid-December to, as of the close yesterday, this is the index, 73.7938. Don't think that's a safe haven trade.
So when people pay off debt, for example, when they say when consumer debt is taken out, money essentially springs into existence by the very act of the miracle of fractional reserve banking. So is the opposite not also true, that when people pay off debt, that money is destroyed and it disappears that way? So we don't always end up with this preservation of mass, so to speak, in that you can't always look to see where it ended up somewhere else. Sometimes it actually goes away, right?
But a stock market correction is not paying off debt.
Correct.
That means that in terms of, dollars in this country, it plunged. Well, if they're selling this, what are they buying with that money? Right? Are they buying bonds? No, not really. Are they buying cash? Right? Go to safety, sit in cash. Cash preserves your principal. No, not really. Are they buying spot gold and spot silver? No, not really. But here's something that's really interesting too, and that's in the physical gold, in the numismatic coins, and really particularly in the lower quality ones, so the cheaper ones. We pulled this. This is from our database that I started to track when I first came here. So it starts really January 2003. I came in June of 2002. Took me a minute or two to build the databases. And look at this, what I'm seeing here. A cup formation is being created. A cup formation, and it doesn't matter what you're looking at, but a cup formation is an accumulation pattern that indicates that the smartest guys in the room, so that's those smart money, has recognized an undervalued circumstance and are quietly building the position. I did check with our wholesalers to see if they've noticed an increase of buying over the last few days. And he actually, one of the wholesalers I spoke to this morning said that they actually noticed a significant increase in buying that started in November. But he also told me that the selling pressure there was still greater than the buying pressure, so that those premiums are super compressed. That means that it was a bargain before, it's just a stupid bargain, physical gold. So, my thought is from what my wholesaler said this morning, plus what I'm getting in the data, is showing me that this is where the money is flying, to the physical metals. Okay, so we'll see. I mean, it has to go someplace. It doesn't evaporate. Well, wealth never really disappears. It simply shifts location. So, and think about it. If you're sitting in the Dow and it plunged 1,175 points and you're still holding that stock, well, that wealth shifted to whoever sold it 1,175 points sooner or 1,000 points sooner, etc. So wealth never disappears. It just shifts location. If it's not showing up in the fiat markets, perhaps it is actually showing up in the physical markets.
If we could turn our attention to some questions that are submitted by some of our viewers specifically for you, we've got a lot more than we're going to be able to ask. So I'm going to try to cherry pick a few out of here. This one's particularly interesting. It's from Without Excuse 2011. Lynette, 3 questions. 1, do you believe that a totally cashless system is inevitable, only a matter of time?
Yes, but I hope I don't see it in my lifetime.
2, do you believe, as I do, that all private cryptos will be taken out by some government decree?
Yes, I certainly do. That's what they're planning on. That's what they're showing you. Yes.
And do you believe that the value in our physical precious metals will be stolen by the criminals in charge by way of some type of confiscation, for example, by taxation? And somebody challenged them on that and says, hey, the government has to know how much you have in order to tax or confiscate it. And the reply they gave was, well, whenever you want to actually use it for transacting, you need to convert it into currency, and that's when they'll get you at the moment of conversion. What's your take on that? Because I know you've talked about barterability in the past, and that may be a different answer. Door number 3 that's not being mentioned here.
Right. And I think it's likely to be, I think monetary gold will definitely be taxed at that level. And yes, whether it's inflation or market manipulation of some sort, all of that is a form of confiscation. They just use another name. And even current history, just looking at what's happened in India and Venezuela and other countries, and Ernst & Young, keep in mind, they publish a report annually on metals and mining. And since the crisis, one of the biggest issue has been mine nationalization, which again is another form of confiscation. And don't forget the bail-in. So that's why personally, my level of comfort is to use the collectible coins, because even though I'm certainly not buying them at that level, the 1%ers that have the ability to spend, millions of dollars on 1 ounce of gold, they're the ones that either write the laws or may have influence over those that write the laws. So, yeah, I think all of that is possible, but they typically, when they change things, they don't change things that hurt themselves. they change things that hurt the public. So my personal level of comfort is to position my wealth in that area, because I believe that in that way, it will be the kind of gold that I can use in the normal marketplace. Some of that conversion may indeed have to be into cash so that I can reposition it, maybe, let's say, into the stock market. Not yet, mind you, but I can reposition it into an intangible market. But I believe that when we are positioning into another, from a tangible to a tangible, like, say, commercial real estate, for example, particularly if I'm buying it from an individual, then I think most of that transaction could very well be direct, in which case I would not have to convert it into dollars in order to make that transaction. So I think it's a combination of the two, but that's why I personally do not own any bullion, any monetary gold. I just own the collectibles because I think I'm safer with that. I have what if I'm right, what if I'm wrong? History has shown us that if you hold that, you're most likely to be able to continue and actually use it in the normal marketplace.
We have another question from Long Go Where To that says, people say that countries will back their currencies by gold. One, does that mean that the actual currency, like the Russian ruble, will receive a backing so that it will be wise to buy some Russian debt papers now? Or does it mean that a new gold currency like gold ruble will come up and that the fiat ruble is toast just as well as all fiat is?
Exactly. And frankly, the only reason why they will be forced to back the currency with gold, and this is, there's a long history on this, is because any currency, any financial system, frankly, is based on confidence. And during this next crisis, if this route is to continue, which I'm not really sure that this is the end, I think this is a gift. This should be a wake-up call to people on what lack of liquidity actually looks like. So, I really, frankly, can you ask me that question again?
Yeah, sorry. Sure. The question gets back to, will the existing fiat currencies, such as the ruble, suddenly become gold-backed if a country wants to move in that direction? Or would they come out with a new version that is gold-backed and the old fiat version is toast?
Well, it'll be a new version, because what they'll do is hyperinflate the old version away and repay all of the debts that they've accumulated with rubles or dollars or euros that have zero value and nobody has the confidence in them. So, yeah, that's when they have to back the currency with gold. It'll be new. So don't buy rubles now. I'm not buying rubles now, or euros or yuan or any of those. And I only keep as many dollars as I need to keep things going. And that is our first line of defense, too. Cash out of the banking system.
There's a number of people in here who ask a surprisingly similar question to each other, and that is about priorities that people should make when they have limited amounts of finances to invest. They say, gee, should I prioritize paying off my debts and my mortgage first, or should I prioritize accumulating bullion, or should I prioritize accumulating some other asset? So this is a very individual question, and we have to clarify that neither our channel nor you directly are giving people individual personal financial advice. But in general, are there some guidelines that you think people should think about when deciding how to prioritize reducing risk through either paying off debt or accumulating assets?
Yes, and I think, for myself, what I did and continue to do is I look at where I personally feel vulnerable. Taking debt at one, there's variable rate debt like credit card debt, and then there's fixed rate debt like mortgage debt, although you could certainly have a variable rate. But what puts you in jeopardy is that variable interest rate. So I do think that you should start to pay that down or get rid of it if you can. Fixed rate debt, then if you accumulate gold, when the reset occurs, that's when gold goes to its fundamental value, right? So just like we were talking about in the previous question, where the ruble would go to zero. So like in Venezuela, it went from 169 bolivars to the last time I looked, 1.5 million bolivars. You could not buy an empanada with those bolivars because they had no value. Nobody trusted it. But you could pay off a fixed rate contract. So with debt, variable rate debt is dangerous to the individual because when those interest rates start to spike, so that's what you really want to pay attention to. Have they lost control of the interest rates? Because that's likely to be what really topples everything. So as long as interest rates, and they keep these interest rates low, then, use that to start to pay off that variable rate debt, but not the fixed rate debt. Use any funds that you would have put in that direction. That's what I've done for myself. You do whatever you're comfortable with. But rather than paying that off, I've used it to accumulate gold with the intention of paying it off after the planned reset and before they reset the mortgage. Beyond that, you really want to look at, where am I vulnerable? Food, water, energy, security, barterability, wealth preservation, and community. So where am I the most vulnerable? Because most people can't do everything at one time. But understand what's going to happen during a real crisis. Your grocery store shelves will go bare. So, there are very inexpensive things that you can do. Rice and beans are complete protein. They're easy to store. So you go to the grocery store, rice is on sale, buy a few extra bags. So toilet paper, it's a great tool of barter, right? So look at those: food, water, energy security, barterability, wealth preservation, make friends locally, create that community. You can start with us for as little as $500 and you'll get your barterable position. You can do some silver, you can do some gold, but you can start to accumulate in small chunks. Just do it consistently and as quickly as you can. But going to the barterability, keep in mind that anything that is physical is barterable, and any skill that you possess is also barterable. So if you can create that community within your neighborhood, maybe you can, like, I've learned how to do irrigation. Do I like to do it? Not particularly. But would I do it if I had to and I swapped for eggs or some of the produce? Absolutely. So, most people can't do everything all at once. You do it, you look at where am I most vulnerable and you start to divvy that up. But you really do have to work on all areas at whatever level you can.
This one is related to mortgages as well. And Joe Hoops 33 asks, I would love if Lynette would discuss her call on mortgages being reset along with the currency reset. She's the only person I've heard talk about that. Everyone else assumes mortgages would get wiped out with inflation. Lynette is telling a different story and is the only one telling it. So this has been a long-standing question among people who are interested in sound money. Some people have gone as far as saying, take out another mortgage on your house so you can afford to stack up a lot more gold and silver, because in a reset, your gold and silver will hold their value and you'll be easily able to pay off your mortgage in the tiny inflated dollars. But is there a danger that it just seems hard, I guess, for a lot of people to swallow that the little guy is going to somehow come out okay in any kind of a financial upset, and somehow that the powers that be are going to take care of themselves through that?
Yeah, I mean, they're not going to forgive your debt. They're going to forgive their own debt. And most people are not going to be prepared because they're not accumulating real money, gold and silver. So what they have, and yes, they will put in, wage increases. They'll probably do universal income, but it'll never keep pace with wealth destruction. It just won't. And, I'm pretty used to being the only one talking about a topic, but that's because I've been studying currencies and currency life cycle since 1987. And I'm not saying that I'm the be all end all, but I don't know too many other people that actually have done that. And so when I speak about mortgages, it's because that's typically what happens. And it typically, on average, occurs about 9 months after a planned currency revaluation, because your fixed rate mortgage is a contract. I mean, they're all contracts anyway, but that's a contract. So the variable rate, they can change like that, but the fixed rate, they can't. So on average, about 9 months after a planned reset is when you get that letter from the bank resetting your principal and your payments. Now, if you're sitting on gold, that's basically when that's probably the best time to convert that gold, however much you need to, into paper to pay off that mortgage. So right now, the fundamental value, if they did the reset today, gold would go somewhere north of 9,500. So let's just say that your mortgage is, just to make my life easier, 95,000. That means that today you would need 10 ounces of gold, which might run you, maybe, say 15 to 20 grand, something like that, to pay off that $95,000 mortgage. However, the piece that also kind of confuses people is the more debt they grow and the more derivatives that they grow, those bets, the higher that number will go. And so what might take you 10 ounces to pay off now would only maybe take you, a half an ounce or an ounce. Historically, on average, 25 ounces of gold would buy an entire city block, buildings, and all. So when I make these statements, it's because that's what's happened historically. It may seem weird, it may seem unbelievable, but it doesn't matter. It happened. So if it's happened and it's happened consistently and we're doing the same thing, it is certainly possible that we get different results. That's beyond my control, but it's not likely. History has a tendency to repeat itself. So, I talk a lot about things that I don't hear anybody else talking about. Oh, well.
Well,
One
of the things you've alluded to in our past couple of discussions, and again briefly today in passing, is the ability to not only have real money that you can convert and barter with, but also the ability, as you mentioned, the shelves at the store will be bare, and the store is not where food comes from anyway. So being able to either produce your own food or to be connected, and you mentioned community, networked with people who do produce food. You have mentioned in the past you've taken up the hobby of being a urban farmer, and I wonder if you could just give us kind of what are your 1, 2, or 3 top priorities, or the first things you've dipped your toe into in that regards, to get people thinking that there's more to this preparedness than just like stacking up gold and silver. There's other things they should be thinking about as well.
Well, I was never really much of a gardener. I might have helped my sister upon occasion or something like that. But seeing what was going on, and especially after 2008, I became an urban farmer in 2010. And thank goodness, because I had no clue what I was doing. So I've just been experimenting, quite a bit to learn how to garden. And you can do that again. You can do that at any level that you have the ability. So I'm fortunate enough. In fact, I moved out of a little 1,200 square foot condo into a larger house on a half an acre of property. So it's not like I have a ton of property either. And then I began to, I moved in like September, October, and I put in my first raised beds in February. So, this was a big focus, and it was because I know my research and I believe what I'm looking at. I started doing that, and it's been experimental for me. If you have like a small space, I mean, maybe you're in a condo or maybe you're in an apartment, aquaponics is fantastic because you can put in a fish tank, and then you can you can grow quite a bit of food vertically, okay, in a very small space. So you can put a fish tank on the bottom, have the water run all the way through it. The fish actually creates the nutrition for the plants. And what you and I were talking about, so I started that in 2013. I'm actually finally now, we've modified it a lot, but I'm actually getting food production out of it. And I'm in the process. So I will do a YouTube video on this. We started about 2 weeks ago to convert my swimming pool that had, as a traditional swimming pool with chlorine and a filter and all that kind of stuff, into a food growing swimming pond.
This is outdoor, is it an in-ground pool?
Oh, yeah, it's 55,000 gallons. It was put in the 40s, so it's really a huge pool, but you certainly can do it on any size. Yeah, it's an in-ground pool. They just put the liner in yesterday, and they're putting in the filtration. So I'll bring in, we've been taking pictures right along, but there'll be floating islands. So no chemicals at all in these floating islands. We plant them out so I can grow whatever, tomatoes, peppers. I mean, I'll do pretty. I like flowers and food as well. So food for the eyes and food for the stomach. But I'm growing food. It's really, the whole piece is a food forest. So people plant trees all the time, right? Why not plant a tree that will grow you, oranges or peaches or something that you can eat? And every year they grow more and more and more, which means you have enough to share with your neighbors. I originally started out, and my goal was to produce enough food for 20 people so that I could take care of my family. But I'm not very good at doing things in a small way. So my bet is that I will probably produce enough food, especially after I'm finished with the swimming pond, produce enough food for maybe 100, maybe more people. And I intend to share it a lot.
That gets back to the networking or you called it a community and barterability.
Absolutely. Absolutely. Because I'm very happy. Anybody that comes to my property that helps on the farm walks away with a harvest.
Is there any reference that you've been finding most useful in designing your swimming, farming pond? I'm not using the right terms, but that other people might be interested can follow up and find out sort of the same guidance that you found?
Oh, absolutely. First of all, what I'm doing is called a food forest. So if you Google it, it'll show you how to grow a lot of food in a small space. And you just really want to consider that if you have the ability. I mean, this is an advantage of living in Arizona, is that we have a 12-month out of the year growing season. So as I was planting my trees, I tried to plant trees so that 12 months out of the year, something was ready for me to eat. Fruit, nuts, as well as vegetables. And then in addition, in the aquaponics, again, it's called aquaponics, and it's vertical planting. You want to Google that. So you can say, if you only have, a small space, you can do it inside of a closet with the right lighting. But aquaponics, vertical planting, food forest, and then, and really what I'm doing is a swimming pond and floating island. So if you Google any of that, you'll get that information.
Thank you for those references. We have a wide range of interests across our viewing audience, and there's a significant portion that are interested in either permaculture and homesteading topics. So thank you for those. And we would love to hear you. We'll circle back with you and get your guidance on how things are going with your floating forests. So before we let you go, would you recap for our listeners and viewers where they can find you online and what the mission that you have there at ITM Trading is?
Mm-hmm. Well, my personal mission is to translate into financial noise into understandable language so that everybody can make educated choices. Our mission is to help the individual create a strategy that helps them not just survive this, but even thrive through it so they can maintain their current standard of living and perhaps even grow their wealth base to position lifetime income and a legacy for their heirs. And we do work together as a team. Our precious metals consultant and we meet constantly. So we're very close knit, and everything that we put together basically is customized to each individual, though what we specialize in here are physical metals. So whatever you do with us, you take possession of. And again, our minimum's $500. So we'll treat you the same if you come in with $500 or if you come in with $5 million, because we think that everybody needs to have this protection.
Well, we've been speaking with Lynette Zang. She is the Chief Market Strategist at ITM Trading. She is joining us here on Reluctant Preppers, and we've been talking about topics ranging from the Dow crash to will your mortgage be wiped out and forgiven in a reset, or what do you need to do floating forests and also obtain real assets to protect your family's wealth and well-being. So thank you, Lynette, as always, for joining us here again on Reluctant Preppers.
Oh, it's my pleasure, Dunagun, and we'll see you the next time. Be safe.
Thank you.